Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. The macro scenario of stagflation, defined as below trend growth but above trend inflation, has become a consensus view amongst market participants. This was evident in the recent Bank of America Global Fund Manager survey, where circa 90% of the survey participants indicated that they see the global economy experiencing stagflation over the next 12 months. The same survey also pointed to an extremely cautious portfolio positioning with significant overweight in cash and substantial underweight in equities and bonds. To a significant extent, the macro view of stagflation and the cautious positioning are consistent with each other. After all, so far this year we've seen that the stagflationary environment has not been good for both stocks and bonds, while cash has provided capital protection, at least in nominal terms. But we challenge this consensus view for 2023 on two distinct levels. First, we believe that stagflation is unlikely to be the scenario that the global economy would face over the next 12 months. Second, even if the stagflationary environment materializes, there is little value in aligning the positioning with consensus trades. Let's discuss these points in detail. First, on the macro scenario, our regular listeners should be aware that we've been working with the thesis that the global economy is likely to experience an asynchronous mid-cycle slowdown rather than an outright recession or stagflation. The Eurozone and UK might continue to experience economic headwinds, but global economic stagflation is at best a low probability worst case scenario. Of course, inflation has been a wild card, but we do expect it to normalize rapidly over the next 12 months. From the headline Consumer Price Index CPI and core CPI excluding food and energy to producer prices and import prices, inflation has come off the boil since the summer. Ranging from falling money supply indicators to easing supply chain pressures to slowing price growth of services firms, most evidence points to softer inflation ahead. Against this backdrop, the question is whether central banks will be able to pivot towards a more accommodative monetary policy. We are of the opinion that should inflation start to cool off, there is little incentive for the central banks to keep their policy tight for exceedingly long. This would especially be the case if growth slowdown remains significant over the course of 2023. As we've been arguing, it is the interplay of growth, inflation, and interest rate policy that would define the trajectory of this cycle and guide the portfolio positioning. This nicely brings us to the second point of our counter-consensus view on portfolio positioning itself. The current consensus positioning of overweight cash and underweight equities and bonds might have worked well in 2022, but this may not be an appropriate strategy for 2023. The consensus reflects its macro concerns also in its allocations. Further, allocations to private markets might have increased over the past year as mainstream public markets suffered. Therefore, the macro scenario of stagflation and cautious portfolio positioning are a crowded trade already. Conventional wisdom is that there tends to be little value in terms of positioning with the consensus now. Contrarian investors might be able to find better asymmetry in risk return. In terms of our asset allocation, through 2022, we've been underweight bonds, overweight cash, and neutral equities and alternatives. However, given the recent strong consensus formation, we might soon turn contrarians. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. You were listening to the Global Investment Insights podcast from ADCB Asset Management, and my name is Kishore Muktinutalapati.